Hey folks, welcome back to another EUVC episode. Today I'm thrilled to be joined by Lucanus Polagnoli and Stephanie Urbanski from Calm Storm Ventures. We just spoke about the pronunciation of Lucanus's name, which is why I went overboard on my Italian accent here. Lucanus is the founding partner and the driving strategic force behind Calm Storm, and Stephanie, who began as a supporting partner, now serves as managing director and is the operational backbone of the firm. Together, we're going to unpack not just the news, the closing of Fund 2, but also the story, the values, and how they work with founders in the stormy reality of early stage health tech in Europe. Welcome to the podcast, guys.
Thank you very much for having us.
Thank you.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Let's start with the news after all. You've just closed Fund 2. Congrats. What's new this time around? What has it been like to grow the firm from Fund 1 to Fund 2?
Yeah, thank you. So I think with Fund 2, we are really actually doubling down on our core strategy. We are backing purpose-driven founders who are changing our life, health, and well-being for the better. We keep focusing on digital health, what we have always been doing. And for us, digital health really is software-only solutions. We don't do molecules. We don't do hardware. We invest in super early stage, also no news there, which is pre-seed and seed for us. Our initial ticket size is around 400 to 500K. And yeah, our general approach is still investing together with the lead investor. But what's new is we are now also prepared to actually co-lead if or when conviction is high.
I can just summarize it in a way like it's same, but different. Same stage, same sector, same geo. The size is a little bit different, a little bit bigger, so more firepower. And that's why we are able to, increase our ownership. That's a little bit different. So the strategy, but we were going to talk about that later on. And of course, the team, which is a big change because if you start as a solo GP at the beginning of first Fund 1, and then you evolve, and over the years, not only Stephanie has joined us, but also Johannes and Ekaterina. So in the end, I think we're doubling down on what works best and we're tweaking the fund model slightly.
You have behind you a bunch of people. Let's talk about that for a second here. You've got an awesome venture partner group behind the firm as well as LPs. Could you talk a bit about that? Because that's something that's always drawn me to your fund.
So the idea of the supporting partners was, in the end, my experience at the firm where I've worked before with venture partners. Because venture partners, they are supposed to bring us deals and do the sourcing for us. It was a very transactional way and not very supportive of the companies itself. And then most of our investors are actually entrepreneurs and they are supporting. So this is kind of then a mix of LPs and venture partners, limited partners and venture partners. And so I came up with the idea to call them supporting partners.
Yeah, today we have more than 60 supporting partners now. And it's just great to have this community because it's a super support system for our founders. Whenever they just, hit the wall, might be in, regulatory fundraising, hiring, we have someone in our community that can actually help our founders. And I think that's a secret sauce we have, this founder to founder knowledge that is powered through the community, coming from the community. So it's really not us being the experts helping our founders, but it's the community, the platform that we are building that enables our founders to stay calm during their scaling storms.
Yeah. I do like the narrative around the name. Let's get into your narrative a bit, but let's start with what was missing in the European health tech funding landscape. I'd love to understand kind of why did you start CalmStorm in the beginning, and maybe also a bit about where it fits in the market today.
So you mean from the very start of CalmStorm?
Yeah, both from the start and where it fits today.
So I have to start long before CalmStorm, I think, in order to put that in perspective. So when I came into the venture scene, the venture industry, back in 2012, I started with a guy called Hans Mang. He's here behind us, somewhere here. I started with, helping him with his portfolio in certain companies, and around me and those founders were very, enormously talented people, but there were also a few digital health founders. The founders of Runtastic that later sold to Adidas, the founders of My Sugar that sold to Roche, and this kind of community also gave me the first insight into what it is like to build something that is not only meaningful in terms of financial return, but also impact. And then later on, when I came to SpeedInvest, became a partner and wanted to, build the health team there, I found that while there was a lot of, interest on the one hand, the industry was still very slow, and it was overshadowed by sectors like fintech and others. So in the years 2016, 17, 18, it was really, I think, very hard for digital health founders to build, to get funding, and also for us as investors to put our money there, because we didn't find any follow-on investors. But then early 2019, when US startups like Sims and Hers, made their big series C, I think with 100 million, or Babylon even got like 500 million. At that time, we thought the wave, somehow the funding wave for digital health will reach European shores, and that will hit Europe at some point. And while at SpeedInvest, they didn't believe it that much, but Hansi really believed that he's also coming from pharma. He made his wealth there. And so we decided to prepare for that wave to hit. And then all 2019 we prepared, and on the 5th of February 2020 we launched the fund. And the vision was to concentrate on super early stage, purpose-driven founders building solutions to increase our health and life for the better. And then just 2-3 weeks later, the pandemic hit. And it was perfect timing. But we actually thought about it long before the pandemic. So we didn't jump on a train that just arrived. We just waited for the train, and the wave didn't come from the US, but was like a tsunami coming from everywhere through the pandemic. So we had the perfect timing. We launched right before the storm, but not by design, but not by accident, but by design.
Clearly, a lot has happened since, because we obviously resolved the COVID crisis. A lot of the companies that got backing through COVID turned out to be built on a bit of an understanding of what the world would look like post-COVID. That turned out to not be super true, because a lot of things actually just went back to how they were. So can you talk a bit about whether that is true for digital health, and if that mood swing, so to say, has affected your portfolio and the entire investment vertical?
I actually don't think that we are back where we are. I think we are not at the hype anymore. That's true, but it's actually good, because all the tourist investors are gone, and we are back at the stage where people who are really into that, doing that for a long time, like us, but also others, are talking to founders who are in there for the long term. And some things have changed that you don't realize so much in detail, but we are not back in those former times where you couldn't get a prescription on your phone or electronically, where you had to bring the piece of paper from the doctor across the streets to the pharmacist. So things have changed. Money is flowing into the sector, but I think what is most important, and that is different to before the pandemic, follow-on investors, later stage capital, are investing in our portfolio, but also in other portfolios. And so you actually can do a Series B or Series C in Europe. And I think that that was needed. And it's there. It's not as hyped anymore, but I think it's a good place to be.
Can you talk a bit about the whole longevity space and how that fits into with you? Because that's, of course, I guess to some extent adjacent to what you do. But on the other hand, I imagine there's also a bunch of digital solutions that ride the wave of interest in longevity.
Yeah, so that's definitely a trend we are seeing. And I do think that's a market change kind of also accelerated by the COVID pandemic, probably, that there is much more focus now on preventative health. So our healthcare system in Europe was so used to, caring for sick people, therapy for sick people. And that has shifted also because, people are realizing that preventative health is important, and they are more, they're willing to pay out of pocket for these things. And that's definitely a trend we are seeing. Longevity, preventative care, a lot of deal flow that's coming in this sector. We've also seen just recently, it's a lot of related with AI. There is so much data out there, and now with AI, we finally can get the insights out of all this of all this data. So I think that's a trend that we're definitely seeing. We've just recently, there's been a study that in the second quarter, there has been 70% of all investments that went into healthcare are related to AI. And that, all the preventative longevity deals we are seeing, there is an AI component to it, and there's a lot going on in the market.
Let me ask you one question, Stephanie, just for everyone to understand you better, before we then go further into thesis and differentiation, because I obviously want to dive into what you just mentioned with the AI wave and how that's impacting digital health. But if we just get some words on your background and your role in the team, I'd love to understand, because you guys have a pretty cool split, I think, between the two of you.
Yeah, so my background is I'm a operator turned VC. I've worked in startups for over a decade. First, I worked in a deep tech startup actually in San Francisco, and then I joined a digital health startup in London. So my heart and passion is really in building and scaling products, and bringing people together. So that's also where my operator background is coming in. So I tend to focus more on the operational side of things, which balances nicely Lucanus' strategic view and strategic thinking. And I think we briefly mentioned it, but what I'm really trying to do within CalmStorm is I'm trying to turn the resources we have and the network we have into additional tangible value for our founders, but also for our LPs. So it's really moving beyond just capital that we can provide. And we are really doing a lot of partnerships within CalmStorm. We offer the founders our resources. We have the community, and that's really what I'm trying to bring together from a strategic execution, but also community building perspective. And apart from that, it's obviously a lot of regulatory compliance, finance, marketing work. So, everything else that has to be done in a fund.
A lot of people underestimate that we are a real fund, right? We are an EUVC fund in Europe, so we have to do all things that also the big funds do. But it's very clear, Stephanie, more or less steers the ship through all the stormy waters that we have to go through. And I'll make sure that we have the right tactics and right navigation to find the right spot where to sail.
I don't think there are many emerging managers that have not been surprised with the operation complexity of running a venture firm, especially when you also layer on a bit of a community model, because as powerful as the community is, it's also constantly making sure that where people can add value and that the value actually is being delivered, and the founders know how to engage with the community and so on. So it's not a simple thing, but it's a very powerful thing when it works.
Yeah, and I think then we have this special layer of co-investments. So we have more than 110 LPs in our group, and we did, I don't know how many, 120 transactions now with them, co-investments where they invested with us, and so that adds another layer of complexity. But I think it is very true to our offering. It is what Calmstorm is about, and that's why I think we don't complain about that. We just try to make it, sail smoothly, and the operations work well.
Let me go to the vertical deep dive. So to say, you just described it well, where we come from and kind of where we sit today in the cycle. I'd love to understand or describe clearly to the audience, why is it that it makes sense that we have a digital health only fund? Why not do it as part of a bigger thesis?
The word only is I think, it's already the answer. Most people see that industry as only a niche or only one industry, but I actually believe that health is the biggest industry we have because it's us. And so the older people get that I talk to, the more they understand how much value and importance health has. And then obviously you can ask from the financial point of view, not only the philosophy point of view. Is there money to be made? And yes, there is, but it's sometimes hidden, and then you have to better dig in deeper to see what's going on in the market. But digital health and well-being means nothing else than software for our life, the prevention to live a good life and not get sick, and then the software that helps everyone to, if we get sick, older, or have some chronic problems, we have support to tackle that. And so while we narrow our investment view on one industry, yes, true, we go super broad within that. And I think that can also deliver the biggest impact for humans. If I invest in fintech, it can impact the balance sheet. If I invest in a digital health company, it can actually save lives. And that doesn't mean that we don't do fintech. We do fintech for health. We do marketplaces for health. We do AI for health, obviously. So while we call ourselves a health tech fund, a health tech focused fund, a specialist fund, a vertical fund, I think that vertical is quite big.
Tell me a little bit about the importance of also splitting out digital from the rest, so to say. That's at least something that I, from a LP perspective, like, because sometimes I can feel that you can have a vertical that is seemingly very, very clearly delineated from other things, but then the underlying mechanics of building firms in that vertical can vary very widely. So if you do health and then you also do some of the more bio-heavy stuff or the more hardware-heavy stuff, that's a completely different business from running a purely digital business. And that's why I feel like, well, okay, it's still within the sector called health, but it's definitely two very different value adds that a founder would be looking for. And for that reason, I must say, like, while digital health gets, so to say, a very small vertical, it's definitely something that allows you as a specialized manager to be very clear about your value add and how the sector works.
We have to return our capital to our investors. That's why we are there. And while we deploy that capital, while it's in the market, we are very happy to support companies to make a real impact. And we have to make sure that we do that in a way where the capital that we can provide works best, creates the most value. And because we are a small fund and we do small tickets in the super early stage, investing in a molecule that takes 15 years and then gets sold once it's approved is very hard for us. Same is true for hardware. Stephanie can talk about hardware because she has been in a digital health hardware startup It takes forever, costs a lot of capital, and all these capital intensive companies. There are investors who can do that, but we are not the right one for that. So you have to know what you can do and what you shouldn't do, and that's why we focus on small capital expenditure. Small teams that can build software that have a huge impact with those small funding rounds as well that we like to see. Yes, it's true in Europe, most companies are underfunded. That's also a problem, but it's underfunded in a different dimension. It's underfunded at the beginning. They get not enough capital at start to test their hypothesis well enough. But then we are rather investing in companies that don't need hundreds of millions in order to deliver their products or services. What do you think?
I agree. And, we want to take a risk, want to be early. We're investing very early, and we are willing to invest, when you have the vision, you have the purpose, without a product. And I think you can do that when you invest in software, because you can hit the ground running, create an MVP, iterate fast, which is very different with hardware. And that just doesn't fit our thesis and what we want to see. We want to invest early, but get to a point where we can see a change and see something happening quickly.
Let me try and understand another thing. Regulatory tends to be some of the things that are difficult to navigate in venture. But I imagine that for you, the complexity of the regulatory landscape and also the understanding of where the opportunities lie, I imagine while there's always a barrier, so to say, to get in, if you know how to navigate it, it can actually be quite the competitive edge for you as a firm.
First, I have to make clear that we do not only invest in regulatory businesses. We also invest in non-regulated businesses, in direct-to-consumer apps and all these kind of things. So a large part of our portfolio, although it's called digital health, has nothing to do with the traditional health markets where you need FDA approval or where you build a medical product. But yes, of course, also a large portion is regulated business. And for a lot of people, this is kind of like a Gordon knot that you have no clue how to tie it up. So regulation is also a good thing. As you said, it is protecting you from competition once you made it. So I give you an example. ThinkSono is a company now, a portfolio that I met first when I was Speed Invest in 2018. And they had the idea to build a software to help nurses to do what normally only radiologists are able to do, to detect the thrombosis in your leg, deep vein thrombosis. It's called DVT. And they had to go through clinical trials and studies and test it and make sure that they can tell everyone their software works as well as the radiologist hits the gold standard. And now, that's 8 years later, they got approved, and they are more or less the market leader for automated DVT scans. Is that very fast? No, it's probably not as fast as in other sectors. That's true. But if you have the grit and the patience and the willingness to stay focused and not, jump the ship when the first storm hits, also for the investors, I think that's a really good thing to invest in. Because what we are looking, if you think about the pitch deck we are looking at the team slide, we're looking at market and problem slide, and we're looking at the competition slide. And this is a clear advantage for someone who made it through regulatory. But as said before, you need enough cash in order to go through that. You need enough risk takers. But I always tell my investors, we are doing venture capital. We're in the risky business. If you want to invest in something that has no risk, then go somewhere else, And then also, I think what is very important here in Europe, we are always compared to the US. And the standard sentence is US is easy, Europe is complicated or complex. And in health, that's not true, because the US market in health is extremely complicated. And so I think the idea everything is easy in the US in that specific case is not true. And that's why also European health companies have that advantage that they can actually build huge businesses just in a few European countries, just because of the size of the market. Think about just something that people can relate to. Think about how much you spend at your dentist. Think about how much money is spent in Germany just for dentistry every year. You can build a unicorn just out of dentistry. And so we don't need to go for not every solution. You need to go to the US to make a big company.
Let me ask you, because we got to turn to AI, obviously. I think anyone who has been in touch with the healthcare system can see the value or the potential value there. I think anyone who has gone to the doctor and gotten their sloppy diagnosis have then gone home afterwards and felt like we got more out of ChatGPT. So I'd love to hear your take on this sector. Like, what on the one hand, the opportunity space, but also where we should be wary and where it's maybe something that's more pie in the sky, or at least something that we are quite far away from getting at.
When we talk about AI, we need to get rid of all this kind of, buzz and hype, and really look into the underlying value, and that is probably very much in health more helpful than in other industries, right? In health, you have such a vast amount of data and research and new outcomes every day that a typical doctor, or let's call that a healthcare professional, no matter whether he works here or there or whether she's in a hospital, is impossible to be updated with the current knowledge of medication or medical knowledge in the world. And so you need help. And the question is, how do you get that help? How do you get updated? And yes, we already had these kind of companies like Diagnosia invested with Speed Invest years ago. These little companions in your pocket. But AI goes a little bit deeper and can just be your partner that you talk to understand what's going on or what you should do. You can ask for help. So if we look at all the industries, I think actually in health, AI can create the most value out of other industries. I believe that strongly because of the situation of the industry itself. Do we invest in every pitch deck that says we are an AI company? Of course not, because everyone now says he's an AI company. And also, I don't think there is a lot of barriers then there. But I talked to a founder who in the US, did studies. She studied on dead hearts, like of dead bodies, and looked at those hearts and did that for years, and then now puts the software on the top of her research, and so she has an own data set and that now the software can play with, and you can iterate so much faster than you could in the past. So there is models that work very well with this new way of computing. And I believe it will be here to stay. And once we get rid of all the buzz, it will be very helpful.
Yeah, and I think that's exactly it. There's so much data out there, especially in health, and what the AI really helps us is, this pattern recognition. And so many work in silos, and with AI, you just have the opportunity to take another doctor's, another researcher's data and really combine all the information and quickly get results out of it. And even you and me can do that. So of course, it will be a game changer in the health industry with so much data available.
Can you talk a bit about, and I'm sure that there's a lot of people in the audience that are really curious about this, because we can all see the potential kind of as you lay out here. The potential is enormous, but what will it look like in 5 years? Will we be more or less the same place that we are today, or will adoption happen quickly enough that in 5 years there's actually meaningful difference in the tools that are used at a hospital? Or because to me it feels like in education and in health, in a lot around accounting as well, that the private companies will move much quicker than our public institutions. And for that reason, I can imagine a wave of privatization happen because you just can build so much quicker from a blank slate.
I don't want to get too political. In some cases, I'm actually very much in favor of privatization. In some, actually, I'm not.
So I hate the incentives of privatization, but I can just see that we're at a place where disruption can truly happen. That's my analysis, that there's so much disruptive potential here. And yes, the incentives of privatization are maybe a bit dangerous, you could argue, with a left-wing perspective. I definitely buy into that. On the other hand, like a slightly off incentive, if that enables a 10x or 100x improvement, well, maybe it's worth biting that apple.
I think we can. So the health industry traditionally was an institute, that there were institutions to help the people. If you think about the first hospital on earth was the clinic in Vienna in 17 something, the first general hospital that was built in order to serve the people, and it came from top down, and it attracted, you know, the at that time most sophisticated doctors, and it was clearly to, you know, approve the society, and there was not a private profit interest in the overall structure. But what you had is obviously these inventions, and they were always driven by private individuals, entrepreneurs who invented something. Vienna or Austria has a long tradition with famous inventions in the medical field. In order to not discuss whether it is better to have a private healthcare system or a public healthcare system, or what we normally have in Europe, a combination of a standard health insurance plus then electives that you can have, and sometimes you have to choose them and sometimes you don't. In the end, I think it's about the pull or the push. So does push down to the people, and this is how we do care for diabetes, or is there a pull from the people that now are so much more informed and you know, demanding certain things that are built by private startups or by whoever, and then the institutions have to follow. I'm always asked by LPs, are you investing in B2B or B2C? And I tell them, well, there is no B2B or B2C in health, because someone uses this, someone prescribes this, someone pays for it, someone is the insurer. So there's so many different ways of getting paid. But the question is, does it solve a problem? And so there's two main answers. The pull from the market will democratize health 100%, and that will very much go along with private ideas, private companies that help those people doing something. And the second part will be prevention, and especially in the prevention part, you have much more private players than in the care part, and the institutionals or public players will slowly adapt. It will take forever in our mind, but they will adapt, because they will do the calculation that it is much cheaper to do a certain procedure before you get sick, and other than waiting until you're sick. But this also needs risk capital, and in Europe we don't have risk capital. I mean, it's a joke what we have in terms of amount of capital. So it will go hand in hand, I think. Does that give you an answer at all?
I asked a difficult question. I think it does. I would maybe, if we add to it, where do you see the biggest opportunities then when you're looking at AI, and AI transforming health? Where do you as an investor think this is right. Like now it's happening.
If you go to the App Store and you look at the 10 most downloadable apps, you most probably see in this difference in country by country, but you most likely will see there's no health app in the top 10.
Yeah, well, except for maybe ChatGPT, which I think the main use case is mental health.
Which I would highly recommend not to use. Highly recommend not to use.
Why? Let's just, for those that have asked ChatGPT for health issues or have friends that have, or kids maybe that have. Why do you highly recommend not to do that?
Well, it's the same as in former times with Google. You ask Google, you search in Google for something, for some symptoms that you think are correlated or that you have right now or that you can see. And then the first thing Google says, you probably have cancer, right? And you should go to your doctor and check it out. So the layer of ChatGPT on top of that is that they are hallucinating.
Yes.
It is not only not good for you, but it's dangerous. So don't do it. There is no. If you want to know the difference for your homework at school or university between certain things, yes, please. But if you are feeling sick, then ChatGPT is not the place to go. And when I talk about the app, the health app that I'm missing in the top 10 download, I mean an app that probably uses to a large part those large language models and uses either ChatGPT or some other provider, but then that's very much curated for a certain topic, and you are not left alone with some weird, standardized, not individualized answers. Some founders have started to build this kind of personal health chatbot, and I think that's a very good idea. It's a very clever idea, but that only works after a long period of training and giving the chatbot access to your medical records, which you normally don't have at hand, to your blood test and so on. So we are more leaning towards certain companies that actually try to do that very right. So we just invested in a company in Spain that tries to collect your health data, sends you to the blood tests in a regular way, and really tells you what's going on in your body on a very high level of sophistication. But just unprepared questioning ChatGPT, I wouldn't do.
Yeah, I think in the midterm, the biggest hurdle still for AI will be all the topics about regulation, data privacy, and I don't think we will end up a doctor replacing or AI replacing the doctor in a therapy session. We just heard that in the US, in certain states, it's actually, there's a law, it's forbidden that AI is used in a therapy session. So I think this human interaction will stay and is there to stay. But I definitely think that AI will help in terms of speed and transparency, how information is used, and also how doctors and hospitals will use all the information they have. So I think this is where I see that AI is going to be used and where we are heading.
But you ask for the opportunities, and I think I give you one simple example so that our listeners can relate to. There is a company in Paris that we invested in that tries to help automate the process between you and your doctor looking for issues on your skin, potential cancer. And it's a very awkward situation if you strip down naked in front of your doctor. And it's also very awkward for the doctor to look at every single part of your body very closely. And in 99% of the cases, he does or she doesn't see anything. And it's just happy that this procedure is over. And the company that we invested in is kind of using this step while you're stripping naked and the doctor sees you and will take a picture of every part of your body with a little robot arm and prepares the decision of the doctor in a way that it will highlight only those 3 or 4, maybe 0 spots where there could be an issue, because the software is so much sophisticated that they already realize what can be an issue and what can't. And then the doctor only looks at those 3 spots, but has much more time to actually look at it and then maybe discuss with the patient. So AI will be the perfect preparation tool, advice tool, companion tool for our healthcare professionals. It will not be there instead of our healthcare.
Maybe we get more than 5 minutes out of the doctors because they have more time and can take more time for us.
Now, let me go somewhere else, because before we leave, as I mentioned in the beginning of the pod, you are doing something very interesting with your operating partners. So maybe I'd love if you could just get super concrete on how you've used them to make a real big change for some of your founding teams.
With our supporting partners, yeah. We have
plenty
of our stories that or things happening with our supporting partners. So I just remember a founder close to burnout, and he jumps on a late night call with one of our supporting partners who exited the company in a similar field, similar area. And at the end of the day, they leave with a concrete plan, and the founder has the confidence to actually execute on it. We've had we've had occasions where a supporting partner started advising this founder and then ended up actually investing in the company, which just shows how deeply engaged our supporting partners can get at a certain point with our startups, and how closely the founders and the supporting partners are aligned, because they have been founders themselves. But in general, I think the engagement ranges from, just speaking at a conference, giving a talk, advising a company, or even ending up on a board seat, on the board of a startup. But obviously, we also know it's a people's business. So there's some supporting partners who engage more, and others who are not that much engaged. So it's also how willing they are to actually bring something to the table.
Yeah, people's business, like everywhere, right? It would be a lie that every venture partner adds value, and it's also a lie that every supporting partner adds the same value, but it's also not built for that. So our incentive structure with the carry that they receive is also very much based on what they, provide to our founders. And the more they're engaged, the more they get, but no one presses them to do that. They won't get a call from me saying, hey, you haven't been around for quite a while. It is also not helpful, because, in the end, founders listen to founders, and if they want to share the story, that's fine. If they don't want to share the story, then it's better, we listen to someone else.
Let me ask you, before we close then, give me a big portfolio success story. I want to hear something that makes us all happy when we think back about the state of health tech in Europe.
I think if we think about Fund 1, the big companies we have is like the Nelly, Lindus, 9am Health, which we were very early. We invested in the very first round, and they by now reached Series B status, and they're crushing it in terms of growth. So just Nelly and Lindus have been on the fastest growing health tech startups in Europe, in their region. So this is obviously something we're super happy to see. And I think another factor that we want to see for our companies is really who are the follow-on investors, who get on the cap tables of companies that we have, been supporting right from the beginning.
Yeah, I think the quality of a portfolio is determined by who picks those companies up. And we have brand names like Sequoia, Bolton, the best funds in Europe, like Crandoma, in my opinion, is one of the best invested in our companies. So we know that not every company can make it. that's clear from the start. It's always hard to see companies fail, but we only win with some of those, a small portion, some of those winners. And I'm very happy that the evolution from fund 1 to fund 2 shows also that we made the right choices, conviction driven. Yes, of course there was an evolution from fund 1 to fund 2. We are now, building a slightly smaller portfolio, and we are trying to invest more at the beginning, taking more ownership, having this kind of cool model of co-leading deals so that we don't have to fight for the winner. The winner takes it all, I think is from the past. It doesn't work anymore, especially with clever founders that know that more people on their capital will make sense for them. And so we have clear winners. We don't have yet an IPO. I'm not so sure whether we see an IPO overall, because most likely, especially in health, we will see M&A transactions, secondaries, and other ways to get out from our point of view. And then maybe some of these companies will stay there forever without ever, having to go on or having to do an IPO. We care about the step up. So we care about what was the valuation we could get in and what is the valuation we can get out. But the way of how that exit works is not as important. And we're trying also to, because it's a small fund, we can do that to get out earlier than the later stage guys, which then, delivers the liquidity in order to do a next fund to support the new founders, because we're going to stay where we are. We double down on the early stage. We will not grow significantly in assets and then become a later stage fund. That's not us.
It's a funny thing you mentioned the logo harvesting, so to say, the importance of the logos that follow on after you. It is it sounds super weird, but it is in the end the single most predictive factor of the success of a portfolio. That is what funds come in after you, and you got to have the right names there. It's interesting, and it's a weird concept. It sounds almost too simple, but it is actually true when you look at the data. Lucanus, Stephanie, thank you so much for joining me on the podcast today. I hope you enjoyed it. I definitely did. And I hope that everyone who tuned in maybe will think an extra time before using ChatGPT for their health. Despite, I have to say, I am one of the big sinners there. And so far, I have been very happy about it. Yeah. But be careful. Message well received. Thank you, guys. Thank you so much for joining me on the pod today.
Thank you very much.
Thank you.
Before we start the show, a quick note. If you're building or running a fund, it takes the right partners. At EUVC, we only work with sponsors we truly believe should be part of your tech stack. Please do take a moment to hear about them. And if you do, reach out, mention EUVC. It's the best way you can support what we do. Thank you so much. First up, Ace Alternatives. Every fund manager needs clean operations behind the scenes. From fund admin to tax and compliance, Ace handles it all across VC, PE, private debt, and real assets. They're trusted by some of the best investors in the world, and if you want peace of mind and a scale-ready back office, Ace should be part of your stack. Finding deals and managing your portfolio is at the heart of running a fund. Synaptic helps you discover status before others do, and Portfolio IQ keeps your portfolio data sharp and ready for LPs. Together, they're essential tools for modern fund managers. When it comes to legal, you need a team that truly knows venture. Haynes Boone supports LPs, GPs, startups, and scale-ups across the full fund lifecycle. Smart managers make Haynes Boone part of their stack. We have two at EUVC. Tech Barbecue. Oh my God, who doesn't love barbecue? Europe's startup scene meets the loudest, friendliest family reunion ever at Tech Barbecue. From Nordic founders to global VCs, this is where ideas catch fire and relationships get real. If you're building or backing in Europe, Tech Barbecue is where you want to show up. And hey, if you've got a big fun announcement coming up, want to hit the headlines, or just want to tell your story out, do reach out to us because we'd love to help. And we've got some killer partners to help you get in the right media places. They've helped us land Bloomberg, CNBC, Financial Times, Forbes, and many more for the EUVC Summit, and we'd love to do the same for you.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.